بسم الله الرحمن الرحيم بسم الله الشافي بسم الله الكافي بسم الله المعافي بسم الله الذي لا يضر مع اسمه شيء في الأرض ولا في السماء وهو السميع العليم بسم الله
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh and good day. Welcome back to my lecture. Now we are in episode 3, which is the last episode. Let's move on to outcome number 4. Do the pro forma statement of comprehensive income PFSOCI using Excel. What is the pro forma statement of comprehensive income with the abbreviations of PFSOCI? Actually, PFSOCI is the projected net profit calculated from projected revenue minus projected costs and expenses. Items in PFSOI mainly we have sales, cost of goods sold, gross profit, expenses, net profit, or vice versa. I have explained about the sales on the episode 2. What is the cost of goods sold, or else we also call it as COGS or COS. Cost of sales consists of all the costs associated with the producing the goods or providing the services offered by the company. For goods, these costs may include the variable costs involved in manufacturing products such as raw materials and labor. Then I have explained details on the break-even analysis in episode 1. They may also include fixed costs such as factory overhead, storage costs, and depending on the relevant accounting policies. Sometimes depreciation expense. I have explained details on break-even analysis in episode 1. Usually, COGS meant for operational or production department. For the purpose of financial plan and the business plan, please refer to the Excel template sheet PFSOCI. Recall back from your PFCF sheet. We found out our cash sales is increasing or debiting our cash in accounting language. Now, the sales value in this PFSOCI is in crediting. No worries, you may copy this data from the previous sheet PFCF sheet. COGS data also from previous sheet PFCF sheet, we found out our costs are decreasing or crediting our cash in accounting language. Now this COGS in this PFSOCI is in debiting. Usually this data from your operational or production department. Again, you may copy this data from the previous sheet PFCF sheet. Total of cost of sales, or we call it as cost of goods sold, and a profit and gross profit is automatically generated. However, you have to remember sales minus COGS is equal to gross profit. Okay, now this slide is talk about the depreciation. What is depreciation actually? Depreciation represents the estimated reduction in the value of a fixed asset within a fiscal year. Tangible assets such as buildings, equipment, vehicles, and so on are purchased in large lump sums, and the value of these assets decreases over time after they are purchased because of wear and tear, i.e. use of the assets and obsolescence. You have to know that the depreciation usually captured after 1 to 2 years company being operated. So therefore, we will not take this item to be part of your pro forma SOCI. Expenses for administrative and marketing. Again, you may copy this data from the previous sheet PFCF sheet. Total expenses from administrative and marketing are also automatically calculated. Again, you have to remember gross profit minus total expense is equal to net profit. If you look at this column P, the bottom right figure RM 297,294 will be posting to PFSOFP. Alright, now we go to outcome number 5, do the statement of financial position using Excel. Statement of financial position SOFP summarize the projected assets, liabilities, and net worth of the new venture. It is a picture of the business at a certain moment in time and does not cover a period of time. Consists of as we have assets, items that are owned or available to be used in venture operations can be current or non-current assets. Example of current assets include cash, account receivable, prepayment, and also inventory. Examples of non-current assets include computer, fax machine, land, and also property. Liabilities. What is the liabilities? Actually, the money that is owed to creditors. Money that is owed to creditors can be current or non-current. Examples of current liabilities included overdraft, account payables, and also accruals. Examples of non-current liabilities included mortgage loans, any loans that have repayment more than a year. Honest security. What is honest security actually? Amount owners have invested and or retained from the venture's operations. Recall back from the sources of funding and capital lecture by Dr. Hafiza binti Madnawi. For the purpose of that, please refer to the Excel template, sheet SOFP. As you can see the spreadsheet Excel, there are 3 elements in SOFP. First, assets. Second, liabilities. Third, equity. If you can see under non-current assets, we have non-current assets from administrative and operations. Again, these items you have to take from pro forma cash flows. If you have buy the non-current assets for marketing department, you have to put it in the pro forma cash flows and pro forma statement of financial position. If you can see the non-current assets, I have cash item only, no for account receivable. Assume all transaction in a cash term but not the credit term. Also, this value is auto-generated. No for account payables with assumptions all transaction in cash term. No for the credit term. Capital and net profit also auto-generated from the previous sheets. Capital from pro forma cash flows and net profit from pro forma statement of financial positions. So to make sure that the balance of asset must be equal to the balance from liability plus equity. You can see the balance here.
بسم الله الكافي بسم الله المعافي بسم الله الذي لا يضر مع اسمه شيء في الأرض ولا في السماء وهو السميع